The S&P 500 hit new all-time highs again, rallying off of the 6660 level this morning to close above 6700. Ultimately, we closed at 6711.20, up 0.34%. And as we've been mentioning over the last week, the largest gamma exposure concentration at that 6700 strike is likely to be a big magnet. And so here we are. We've been also noting that a move back above 6700 would likely be met with some dealer selling pressure, depending on whether or not more market participants come in at these higher strikes. And so the volume today was rather muted at these higher strikes. We think there could be some consolidation kind of in the 6720 to 6650 zone over the next week or so. As we've been mentioning, our upper dealer cluster zone is above 6700, so any further price action up above these levels is going to be met with extra dealer selling pressure as dealers are forced to sell shares of the underlying security, or in this case, forced to sell more futures contracts in order to hedge their underlying long call positions at this 6700 strike. And so this is essentially what gamma exposure tells us. It tells us where there is extra pressure, either buying pressure or selling pressure from dealers, and it also gives us insight into market participants positioning at major levels. So what we're going to be looking for during tomorrow's trading session is the volume at these higher strikes. If we see volume picking up throughout the trading session, we'll know that there is increased activity, for example, at the 6750 or 6800 strike. However, barring that, I do expect some of that selling pressure to kick in and forcing price back down to 6700 or below.
Thanks, Anthony. A lot of the upside that we've seen since the market bottomed a few days ago has really just been with the S&P, the NASDAQ, and the Dow. I have IWM pulled up. You can see since September 23, it's actually lower, and it's been trending lower, even though we have seen a positive move over these last few days. So while IWM has been kind of choppy sideways lately, it's still stuck slightly below this whole moving average at 242.77. Today's close at 242.49. We do have this large GEX cluster, both positive and negative GEX at 240. So while it doesn't look like a lot on a net GEX basis, the presence of these clusters on the positive and negative side, probably mean 240 is an important area and a possible line in the sand for a move lower toward 230 or a move higher toward the GEX that we see at 250. Let's briefly flip back and take a look at absolute GEX as opposed to the gross GEX. And you can see that our net GEX at 230 is pretty close to what we see at 245. 250 is still the largest cluster. It is spread out across a variety of expirations. IWM GEX is still negative, actually, as of the last several days. We had a slight tick upward today, but there's nothing definitive. It's within a neutral zone, and so we need to keep a close eye on this, and maybe it will give us a slight advanced warning of the market turning back over.
Thanks, Sean. Along with small caps, a lot of the smaller large cap companies have been making a pretty big move over the past several weeks. And one of the names that we've taken a position in is CrowdStrike. We actually added this to our portfolio back on September 15th. We bought an October 17th 480-500 call debit spread for $4. So our max risk on this play was $4 and our max profit potential $16. Now we are still in this position, but I just wanted to point out at the time we entered this trade, CrowdStrike was trading at 448.34. This is from our original post, and this was the setup that prompted us to initiate a position. CrowdStrike was crossing the 50-day EMA. We were seeing positive gamma exposure growing all the way up to that 500 strike. And on this particular day, back on September 15th, there was over 10,000 contracts traded at the 540 strike. And so all of those factors combined look like this was forming a bottom and that there was some pretty big upside to come in the next few weeks. So now fast forward to today, CrowdStrike is trading just under 500, and so that target is met. We actually hit 500 right after we initiated that position, but our short calls at the 500 strike had way too much premium in them for us to feel comfortable locking in that gain, so we decided to hold it. We're still holding it. Price came all the way back, and now we're bumping back back up against this 500 strike again. The gamma exposure is still concentrated at that 500 level, and I think we could see a further leg higher beyond 500, maybe between the 500 and 520 range over the next few trading sessions. And so if we do get that, we will lock in profits on that 480 500 call debit spread. But for now, we're going to continue holding and collect a little bit more premium. By the way, if you want to track our trades in real time as we manage our options portfolio, you can become a member at geeksoffinance.com. You can also check out our community Discord absolutely free to get a sneak peek of what we're trading right now. I'll put links in the description below to both of those so you guys can check it out.
Anthony, looking at the VIX, I do think there's some unusual things happening with the VIX that we haven't seen in a while, even as the market's marching to new highs. And the last 2 days have been fairly quiet despite the VIX showing a lot of activity. So certainly some divergences here. I have the weekly chart pulled up with the whole moving average, which is orange, and the 9-period SMA, which is yellow. And I just wanted to point out that the VIX on a weekly basis is currently above both of these lines, which has not happened in 9 weeks. The last time we saw the VIX above both of these lines, at least on a closing basis, was 9 weeks ago. And that's this big green candle that you see here. So we still have 2 days left in the week. The VIX is at 1629. If we bring our focus down to smaller time frames, I have the 2-hour chart pulled up. You can see we are below this thick cluster of lines representing various support and resistance levels. I would prefer to see this line come down a bit more, implying maybe some more time, whether it's sometime tomorrow or Friday, even with the VIX declining more. If we can see the VIX come down closer to this 15 and a half area, this may set us up for Sunday or Monday to finally see a setup where we're back at the bottom of this 2-hour Keltner channel that has served as a pretty good guide in the past. You and I both are in the buy the dip mentality as far as the market goes. So if we do see the VIX spike, we see indices pull back, we'll use that as a chance to initiate new long positions as we hopefully approach that 7,000 SPX level into year end, as we've been pointing out.
Thanks, Sean. Next, I want to take a look at Palantir. Palantir up 1.39% today, closing at 184.95. We've been consolidating between 175 and 185 over the last 2 to 3 weeks. And with today's price action, we're bumping right back up against the upper end of that resistance zone. And especially over the last week, you can see a series of higher lows as we're approaching that overall big resistance. When we look at the gamma exposure data, we see growing gamma exposure on the positive side all the way up to the 200 strike. So this does in fact look like a potential breakout. And 190 would be my first immediate target. And that has the potential to come in the next couple of days, with 200 following potentially in the coming weeks after that. Today, for example, we saw quite a bit of volume in the options market, over 60,000 contracts at the 190 strike, and well over 25,000 contracts at the 200 strike. And so as you can see, all of the volume was at 180 and higher. And basically that's suggesting to me that there's a lot of interest at higher strikes. And so we're going to be watching this very closely in tomorrow's trading to see if we do get a breakout or not. But I do think that 190 level is coming sooner rather than later. So we got to monitor Palantir closely, and we'll be looking at option strategies to take advantage of a potential breakout move in Palantir.
You know, if we do see indices continue to push higher, which appears to be a strong possibility, I'm always looking at the Magnificent Seven names that might be the next rotation candidates to push the indices higher. So Microsoft popped up on my screen. We have price maintaining above the whole moving average here. And even though we see this big GEX cluster at 520, which is just overhead, the volume at 530, as well as positive GEX that's lined up really from 530 up to 550, really makes me think the odds are tilted in Bull's favor for Microsoft to potentially push higher at least one more time. Even if we do make a lower high compared to the recent summer high that we made, I could easily see us reaching this 530 or 540 area, which would line up pretty nicely with the upper Keltner channel. So we'll have to see how this plays out. If we do lose that 515 area, it may imply that there's some more downside, and 510 appears to be a bigger line in the sand. So we kind of have our parameters set here, and we'll see what the price action tells us in the coming day.
And guys, it's not too late to take advantage of our special promotion. You can get $300 off our yearly portfolio manager tier subscription. Use code September 2025 at checkout. We do have a couple spots remaining, but obviously this promotion is going to be ending soon as September has just ended. So definitely take advantage of it while you can. Members get full access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you'll also get access to the premium channels in our community Discord. There's a ton of great traders in there sharing their own trade setups and ideas. And you can also track our trades in real time as we manage our options portfolio. I'll put links in the description below to all of that so you guys can check it out. Thanks so much, everybody, for watching, and we'll see you guys in the next video.